Time for another stock review. This time we're looking at Uranium Energy, UEC. I've reviewed now nearly 200 stocks, and if you are a member of my channel, you can have a review. You do a super chat from $1 all the way up to whatever, and the higher you super chat me, the higher it goes up the list. And if you do above 20 bucks right now, you'll be at the top. We also have a play it now, which is an immediate do it straight away review of $100, and it gets done straight away. You can bid just $1 and you'll be at the bottom of the list. Today I'm trying to get through all our reviews. So our next review is Uranium Energy. Now, full disclosure, what you're going to see now is completely real, genuine. I've got no interest in this stock at all. I don't own the stock. I only own the S&P. I don't pump and dump stocks. I'm here to give you the information so you can make an informed decision of whether this stock is right for you. Now, during this review, I'm going to give you all the information, everything you can possibly imagine around the stock so you can decide whether it's right for you or not. We're going to look at what is Uranium Energy. I mean, it sounds kind of obvious, but what's the business all about? How is it traded? You can see there. I'm going to share with you the balance sheet, the profit, the loss. I'm going to show you the intrinsic value, who's buying on the inside, who's selling on the inside, what the short position is. I'm going to share with you the website, latest news. We're going to do a back test against the S&P 500. Look at the latest news, look at the latest analysis reviews, so you can make an informed decision whether this stock is right for you to buy, hold, or sell. So are you ready? Without further ado, tap the like button. If you do reply to this video, leave a comment. I will answer all of my members and give you all a reply. From time to time on members' days, we also do video replies. And also to accompany this series of reviews, I have a Meet the CEO series. You can invite the CEO onto the show. That's how we've done many in the past, and we've got many more in the future. You do it. I don't sell my services at all. I don't believe in it. I just wait for them to come to me. So you are an investor in this company. So you can reach out to Uranium Energy either via the investor relations website or create a social media platform or, a group on Facebook or Reddit or anywhere, wherever. I will provide you with all the earnings. If you're one of my members, you can ask me to do earnings, cover latest news around the stock and all the rest of it. Below the video in the description and above my head, you'll find the all links button so you can see the software that I'm using. All my members get a free version of this plan, and my members can also get a discount off the premium plan, and that will give you, basically make my membership for free. But if you look below the video in the description, you'll see the invite the CEO video, so you can invite the CEO onto the show, and we'll learn even more about the business. Right, let's start right at the very beginning. What is this stock? What does it do? Well, it's Uranium Energy, kind of speaks for itself at the moment, but Uranium Energy Corp engages in uranium and titanium related activities, including exploration, pre-extraction, extraction and processing of uranium concentrates and titanium minerals. It also operates through the following geographical segments: United States, Canada, and Paraguay. Founded in 2003, headquartered in Corpus Christi, just down the road from me, here in Texas. 83 employees, a very small company. Amir Adnani is the CEO. And I'm just looking. I just thought, actually, I know it sounds crazy, but just for a moment, I thought that was the person who actually asked me to do the review. Wouldn't that be weird? But it wasn't. The person that asked me was Mustafa Abdin. But when I saw Adnani, I thought, hang on a minute. The CEO has asked me to review their stock. That really would have been funny. But anyway, there you go. So let's have a look at the chart. Just the basic line chart. You can see it's very, very volatile. Up and down, very much a trading stock. There's no dividend here. It's just growth, 28% over the maximum period that we're showing here, which is since 2007. I think that's when it IPO'd. Let's have a little look down here. When can we see the inception date? Founded in 2003. but went public 2007. Yes, listed on April the 5th, 2007. So it dropped back down. It went up, came back down, gone back up. It looks like a secular stock. It goes up and down. A lot of these sort of things can, of course. We've seen that in the mining stocks, Rio Tinto. Metals go up, metals come down. It's a good, like same with oil. You buy at the bottom, you sell at the top. All the rest of it. Anyway, there you go. Let's get a bit more to it. Market cap of 3.3 billion. That's quite a big company. High today, 756. 52-week high, 834. Low today, 731. 52-week low, 245. Price to earnings ratio, negative $529. So it's too expensive. In other words, you're paying a lot more for the value. The price to earnings ratio is negative 529 million. So it's not making any money at the moment. No dividend. It's going down and all the rest of it. So anyway, what do analysts say? Now, I don't take what they say as a sign to buy. They're paid to review these stocks, and they have influence over those stocks. For me, I don't own the stock, so the opinions I give you are real. That I'm not pumping the stock. I don't own the stock. I never will. I only own the S&P, so you know my views are genuine. We've got. As you can see, we've got an earnings which is tend to be beating thereabouts on earnings. Our next earnings is June the 6th. If anyone who invests in this stock gives me a super chat and says, could you cover it? I will cover it for you. June the 6th, expected. Doesn't mean it's going to be that day. But as you can see, the stock is going sideways. It's not really making any money. In fact, it had a period where it just came cash positive, and now we're just trending along the sort of flat line. But it's too expensive, or it appears expensive at the moment. Or in fact, it's negative. So 529. I beg your pardon, 529. We'll look at the intrinsic value in a moment and we'll really value it out. But who else is buying this stock? Energy Fuels, Denison Mines, Cameco, Next Energy, Next Gen Energy, UR Energy. So it's kind of all in the same sector here. That's unusual. Normally you see stocks, different sectors littered in there, but it all pretty much seems to be in the same sector, which is all up at the moment, which is kind of nice. Now, I can honestly tell you I've not reviewed any of these, so I don't know how these stocks trade at all. Sometimes we see a stock in there we recognize, but I've not reviewed any of those, so I can't give any thoughts to that. Anyway, let's have a look, first of all, at the basic information. We'll go a bit more deeper as we go. Tap the like button if you like this so far. Let's look over here at the analysis. Things are... the valuation has moved up from F to D, so it's moving up, as you can see here. Green growth is C minus, B back down to C. What about the buy ratio? We've got a strong buy from Seeking Alpha. Wall Street is saying a strong buy, and Quant, which is their AI trading platform, is saying hold. So we've got some relatively bullish signal there, I would say, from that. Some latest news just a couple of days ago. Cameco uranium named surge as US set to offer up to $3.4 billion in funding. Okay, what's all that about? Let's have a little look down here. Uranium producers, including Cameco and Denison Mines, are surging Friday following news that the US government will ask companies to bid next month on contracts for such as $3.4 billion of domestically produced nuclear reactor fuel. Cameco, Denison, Uranium Energy, there you go, up 6%, all benefiting from this, of course. That's interesting. Earlier this week, President Biden signed a ban on imports of enriched uranium from Russia. About flipping time, really? It's taken all this time to do that? Bloody hell, can we have banned that 2 years ago? Anyway, whatever. Which provides 25% of the reactor fuel in the US. How come that's just been done now? I thought we'd stopped giving Russia money. Earlier this week, President Biden signed a ban on imports of enriched uranium from Russia. I'm like, what? I mean, that's still going on. Anyway, 25% of the reactor fuel in the US the ban takes effect August the 11th. So we still got a few more months giving Russia money. Doesn't that surprise everybody? Surprises me. Leave me your thoughts below. Did you think that we'd stop giving Russia money? I thought we had. Clearly not. The signing unlocks $2.7 billion in funding in previous legislation to build out the US uranium fuel industry. Well, absolutely right. Shouldn't it be like that? I thought it was. Centrus Energy, which currently obtains the majority of its uranium from Russia, is among the companies that has said it will compete for the funding. Great news. So that could be a good catalyst for the stock. We like that. In a minute, we're going to compare it to the S&P. And in fact, I'll do that very quickly now for you. Now, look, this is interesting. The blue line is the S&P. The green line is uranium. And you can see it kind of follows, apart from the odd little ripple, kind of follows the main trajectory of the S&P, which is good, right? Which is good. But recently, since July of 2023, it's dramatically gone up. And see from January 24, right here at the end, you can see how it's been outperforming the S&P as well. You can see that. So that's very, very interesting anyway. But that could obviously set to go up with what's going on right now. Anyway, there is how it compares to the S&P. Always good. Let's look at the numbers now. Don't forget to tap the like button and smash the like, subscribe and ring the bell. That'd be nice if you can. It's an election year. Is that what it is? But seriously though, I thought we'd stop spending money. I got a member here in the chat. You know, it's like equally surprised, really, I would imagine. I thought we'd stop doing that. Anyway, there you go. Surprise. Never seem to be surprised by humans. Anyway, it's beyond words sometimes. Anyway, intrinsic value. Let's look at the intrinsic value. Intrinsic value, valuation, overvalued by 79%. Overvalued by 79% at the moment. We're valuing this at $1.55. Best case scenario, 209, 72%. Worst case scenario, 82%. So it's very expensive right now. Remember what I was saying? It's very, very expensive at the moment. The stock isn't making you any money at the moment. It's expensive. All right. Let's move on down now. Then, what else do we have here? When did it last report? January the 30th, 2024, we were negative 45% on revenue, 59 million, which is down 45%, but expected to see that rise. And of course, if we do a deal, the US does a deal with Uranium Energy and we stop bringing in Russian energy, then obviously it's set to rise. That would be a good move, wouldn't it? Russia don't get any more money to buy bombs. And America makes money. Sounds good to me. I'll vote for that. Anyway, there we go. So that's, no, I mean, are we even having this discussion? So anyway, there is what's expected. So that looks like a nice little bit of an S-curve, if you like, coming up. So we like that. What about some other metrics here? The operating income. The operating income is down to 293% on the most recent range, which was January the 30th. But now we're expecting things to really, really turn around. So that's good. Net income is negative 4.9 million. Again, expecting it to rise. But you see how it's secular though. Rise, fall away, and then rise again into 2026. Or 2025 rather. Operating income is down 544%. Investing cash flow is negative 46%. Investing cash flow, which is a positive, by the way. That's a positive. Financing cash flow up 52%. That's also a positive. Let's have a look at the balance sheet. The balance sheet has 878 million in assets with 109 million liabilities. Okay, that's good. It also holds cash at 82 million. So that's good. So far, it's looking good. The balance is right between assets and liabilities. Look at the liabilities. No long-term debt. It's good. This will be a nice balance sheet. This will be a good balance sheet. I like it. Scroll down. So far, I like this because we need energy. And America taking back the energy for itself. It's got to be a good thing. Got to be good there. So I like all of this so far. It's expensive, but I can see where it's going. If they get a slice of that contract, it could be nice. Let's scroll up as well. We are seeing, let me just refresh that screen. We are seeing a bit of a delay. There we go, getting the figures in. 36% gross margins, not very good margins at the moment. So it's not doing very well profit-wise, but certainly a balance sheet will be okay. Scrolling on down, let's have a look. There we go. Didn't I say the balance sheet would be good? 81%. Now, what does that mean? It means their balance sheet is good. It means they're not going to go bust in the near future or even the midterm future. They've got money to continue operating. That doesn't mean to say they're going to make money, though. So if we look over here, it's 31%, which is not that bad. We are a few points away from starting to turn green for the profitability. They're not red. They are making some money, and hopefully this can improve. But right now, with 31% profitability, 81% on the solvency score. We do see a nice upside here. Worst case scenario, 11% downside. So it is expensive at the moment, but I'd imagine it's all trading and trending off this recent news. And if we look back, we can see it's been rising over the last 3 months since March. So it is expensive. It's maybe a bit late to buy it now, but nevertheless, got a 35% on average upside, which is good. 13.65 is expected if we get to 82% upside. So is it worth investing in this? Well, I think potentially it's a possible buy. It's not the best time to buy. It's expensive right now. However, that news, but remember, we don't know how much of that deal they may get or none of it at all. So, I would say you would want that. What about insiders? Insiders have been selling the stock recently. The latest, during the last 12 months, Uranium Energy insiders have not bought any shares, but have sold 1.5 million shares. Okay, so we don't see any investment buying, but we do see some selling. What about short interest? Well, the short interest is 9.76. So not excessive. Don't expect a short squeeze or anything like that. Not enough volume, and there's not enough short interest for that. Sentiment. There's no sentiment on this stock at all. No one's really talking about it. If we look down here for the sentiment and news, the last news that was picked up was 2 years ago. So very few people are talking about this stock at the moment. So with a bit of attention, you never know. Oh, sorry, I beg your pardon, not 2 years ago. I apologize. I'm really sorry. 2 weeks ago, there was information 2 weeks ago. So I apologize for that. So what I'm going to do is... let me have a look. This was just 3 weeks ago. Let me pick up on this news. Oh, sorry about that. I don't know why I thought 2 years. Anyway, let's have a quick look at this.
Domestic uranium producer that shut down some of its mines in the wake of the 2011 Fukushima disaster. But UEC plans to bring those back online this year and in 2025 to meet soaring demand for the mineral. Joining me now for an exclusive interview is CEO Amir Adnani. Amir, thank you very much for being here. This is such a multifaceted story because it's not just about nuclear energy anymore. It's the crossroads of so many different current investing themes. What is it about U.S. uranium production that needs to change in order for us to be better positioned as a country?
3 words, Dom. Grow, grow, and grow.
That's like drill, 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 right?
Drill, drill, drill. You got it. And the bottom line is we used to lead the world in uranium mining. The U.S. industry did before the collapse of the Soviet Union. Following the Soviet Union collapse, we made room for them in the Western markets. And this is the reversal of that, where we're really seeing a repatriation of the nuclear fuel cycle, that the $2.7 billion being provided in policy and the Russian uranium ban should provide. There's absolutely, I think, every intention to see growth in front of us here for the domestic industry, for all the reasons you mentioned.
Oh, so for the oil industry, it's about trying to find kind of proven reserves, find out where the commodity actually lays underground. Does the U.S., does domestic U.S. territory have the ability to support ramped up production? How prevalent can we make the uranium business in the U.S.?
100%. The world's largest producer of uranium is the country of Kazakhstan. After Kazakhstan, the state of Wyoming, for example, has produced more uranium using the low-cost in-situ recovery method than any other jurisdiction. We have a over 40-year history of uranium mining in states like Wyoming and Texas. And so the know-how is there, the knowledge is there, Mother Nature is there in terms of the mineral endowment. It's a lot like oil and gas in the sense that when we were importing over 50% of our requirements in early 2000s, it didn't seem feasible to think we can one day be exporting natural gas or oil. And it's the same thing with uranium. I think the U.S. has the right ingredients, and the companies like ours who are leading the way towards restarting uranium. And look, Dom, right now we're importing over 95% of our uranium requirements. Uranium is so critical to the intersection of all these themes that you talked about: energy security, national security, energy demand from data centers for AI, generative AI. So we have to address this issue head on. And now what if we have Russian retaliation? And we should talk about that. I mean, there's the risk here of what Pippa was talking about, that if we get a retaliation from the Russians to halt exports to the U.S. sooner in reaction to the ban, then we could see even further risk to higher uranium prices.
This is a capital expenditure story that's not 1 or 2 or 3 years in the making. I mean, to get these mines up, running, online, productive could be a 3, 5, 10, 15, 20-year proposition to really get us the scale that we need.
Yeah.
Is the industry, is your company prepared to make that kind of commitment given the sentiment around nuclear power in this country?
Let's talk about commitment. I started this company 19 years ago. We've been committed for 19 years. And since the downturn we had in uranium was a hated sector for a long time. My company has made close to $1 billion of acquisitions of uranium, idled mines, and projects when uranium prices were between $20 to $40 per pound. Today, they're over $90 per pound. And so clearly the commitment has been there from folks and companies like UEC that have demonstrated that we want to lead and lead U.S. uranium production higher. We are the fastest growing company. But this is, as you point out correctly, a long-dated industry. These are long-term trends. And Dom, I think we're going to have higher uranium prices for longer, because even where the price is today at $92, we're well short of the all-time high on an inflation-adjusted basis, which is closer to $200 per pound.
Nuclear energy is the new renewable energy power source that we know, so to speak, versus some of the other technologies out there. But there's been an overwhelmingly negative sentiment around nuclear power among certain parts of this country. Do you think that that's changed enough given the energy?
Okay, that's very interesting. Very interesting indeed. Let me scroll down here and see if we've got any more sentiment news. It doesn't look like we do. I just wanted to see if the sentiment had changed. But listening to all of that, taking all that into account, because of the ban, it made a very good point. Russia might all of a sudden turn off the tap and go, all right, fine, well, if you're going to ban us, we'll turn off the tap. They can't afford to. They need us to give them money for that, but that could certainly put uranium prices up even further and make this more scarce. And this could be an explosive business. Now, it's a very clean energy done safely, and it is renewable and it is clean done safely. Whenever we think about uranium, we think about nuclear bombs and explosions and radiation and all the rest of it, and it all sounds a bit scary. But in reality, it's actually a very, very clean power managed properly. That's the key word there. But I think potentially these businesses that are going to get the opportunity here to get the US business, and the UAC is in there, this is only upwards from here. So looking at it, looking at the balance sheet, looking at the numbers, I am going to, normally I would say I'd hold back here, but I think it's a buy from me. I think that this is a stock that is a buy. I know if we look at the 5-year, the maximum year, it's at highs, but like he explained, the price of uranium is nowhere near the all-time high. Is there a better opportunity to buy this stock? Well, I don't know. We're not that far away from this deal being done, but of course it's a typical example of buy the rumor, sell the news. It's already happening. And my thought would be, if I was investing $1,000 on this stock, I would have $500 in. I would keep $500 back for a pullback. The first sort of 5%, I would spend another couple of hundred, and then I would save the rest for a bigger drop. And we might have to wait a few months. If not, let it go. I can always find dips along the journey in a year from now and start to finish off my allocation. But I think that this type of energy has a place along with EVs and electric. It's not just, I mean, that's, we need to produce more power. We need to be independent. I think this is great. This is the way forward. I think it's good. So yeah, I'm going to give this a buy. So there's my review for Uranium Energy. I'm going to give this a buy. UEC. It's expensive right now, but I would have preferred to have bought this a couple of months ago, but we're just finding out about it now. So is it worth a buy at this level? Yes, because if we look at the expectations, 35% upside, I can afford 11% downside, the worst case scenario. Because if we get that, I would just buy more and know my average. If I was buying $1,000, put 500 in now, when it drops, I'd buy some more. So I'd get closer to that worst case scenario. 35% is good. That's more than double the S&P, 82%. And it could go a lot higher than that, of course, if we get the macro condition, which suddenly changes, like the Russia suddenly banned their uranium, or whatever, they stop supplying it. So there could be masses of upside here. So for me, it's a buy. Anyway, click above my head for all the links. If you want the software that I use, you can. Alpha Spread. My members get a free plan, or you get a lifetime discount using my membership, and you'll get basically my membership for free. The link's there. It's on martynlucas.com. All links, the all links button, it's up there. Also, it's also down below in the description as well. Also over here and over here, I'll put the playlist for all the reviews I've done and the playlist for this stock. So the playlist for this stock will be down here. I'll create one today. And over here, I'll put the Alpha Spread playlist of all the reviews that I've done. So you can go and check out all the stocks I've reviewed in the series. Until next time, as always, take care of yourselves and each other.